Another thing to keep in mind, value wars are in full effect, so really any announcements around that will be critical. Another area to watch is breakfast. That's a very important part of the day for McDonald's. Finally, keep an eye on China to see if there's any impact from an ongoing trade war with the U.S. Back over to you.
All right, Kate, thank you. Kate Rogers. Well, Carter and Mike have both made their way over to the plaza for another options action tag team. So Carter breaks down the charts. Mike will come in and give us his trade. So, Chartmaster, why don't you kick things off? You say there's even more pain ahead for Mickey D's.
Well, that's right. I mean, let's just put it into perspective. First of all, I've gone back to 1980 just to show where McDonald's has come from, and McDonald's not on here yet. So S&P, and what we know, of course, is that double the performance of the S&P is the NASDAQ composite. Now, for fun, let's add McDonald's, and it makes the NASDAQ look like a piker, meaning one of the great growth stocks of all time, right, in the pantheon. But the issue is, of late, it's very toppy and starting to stall. At least that's my judgment. So, first, compared to peers, and we've just heard the lead-in, this is great performance year to date. You see the names. You've all been to these restaurants. 30, 40, 50% gains across the board year to date. Cheesecake Factory, Denny's, and yet down here, all by itself, struggling, is the one that is the most important, if you will, in terms of its place in the American landscape. So now, look at the current one-year chart. It's all reversed. McDonald's is not way up at the high. McDonald's has started to stall. And of course, S&P and then NASDAQ leading. So the great winner long-term is now the one that's losing, and that's a sign, I think, of exhaustion. So put this right here on the chart, draw your trend lines one way, and what we know is that just coming down to trend would get you a pretty good sell-off from here. How about if we put in the Head & Shoulders top? Would get you a pretty good sell-off from here. Or one other way to look at the lines, we're consolidating. Some might say it's going to break out. That's fine. That's a bet I would not make. I think it's going to break down. So with that, again, that's the premise. My main man, take it away.
All right, so it's interesting. We've got McDonald's coming up here. They're going to be reporting earnings. The implied move for McDonald's right now is about 3.3%. That's actually slightly higher than they normally have. So we're going to use a spread to mitigate some of that higher options premium. Specifically, I was looking at the September 155 145 put spread. I'm targeting 145 to the downside, spending 365 for the 155s, selling those 145s for $1.15. So net, I'm spending $2.50, which happens to work out to 1/4 of the distance between the $10 in the strikes. And one other quick point I would make is that by selling that downside put, taking that premium, you are improving the odds somewhat because, of course, the break-even is going to be right here at 152.5 rather than down at 155. 151.35, which is where it would be right here. So we're improving the odds. We're going to get some decay from this, and we're targeting maybe 145 in a little over 60 days.
Dan, what do you think of the dynamic duos take?
I love it. I'm really jealous that I'm not
you
there
wish you
with
could,
them.
Like, tag in
but
too?
maybe we'll do that a little later. So here's the thing. So, Mike, it looks like 145 to the downside. You're targeting that uptrend, and I like the width of your the premium that you're basically about 1/4 of the width of the spread. I just have one question for Carter. You know, at some point, when it gets back to that uptrend, let's say you're right, and let's say it's something fundamental, wouldn't you, at some point, expect that to just really overshoot to the downside a little bit?
I mean, obviously, we have to get to the downtrend, down lower before overshooting the downside. But we're targeting the intermediate low on the chart, not shown here, and I think that's where we are headed on a more immediate basis. From there, sure, it could get a lot worse. This has been an excess returning stock for quite some time.
Yeah, the excess return that we got also was a lot of one-off things. We were talking about SG&A cuts. We were talking about refranchising efforts. We were talking about breakfast all day. So these were shifts that you can do one time, and then you get a potential boost from that. But the long-term secular trend was not necessarily in McDonald's favor in terms of top-line sales growth. And that, of course, it might be where they could run into some headwinds here.
All right, good job, Cohen Carter. Up next, Netflix falling 8% this week after reporting earnings, but that's great news for Cohen Carter. We'll tell you why. Plus, have an options question for one of the traders. Send us a tweet to @OptionsAction. Make it a good one, because maybe we'll answer it later on the show. We're live at the NASDAQ market site in Times Square. Much more options action in just a couple minutes. Welcome back to Options Action. Time to take a look back at some of our open trades. Just last week, Mike bet Netflix's amazing run was done. And done it was. Here's how Mike cashed in. On Options Action, it's how we make instant hits. Risk less so we can make more. And that's exactly what Cohen Carter did with their bearish bet on Netflix. Carter thought the stock looked a little extended heading into earnings.
I think Netflix has downside risk.
Mike thought. The chart master might be right, but shorting this high flyer could be risky.
If you get this wrong, that'd be very, very painful.
And he's right, because shorting Netflix, or any stock for that matter, could lead to infinite losses. So instead, Mike bought the August $3.95 put for $22. Now to make money, Mike just needs Netflix to fall below that $3.95 strike by more than the cost of the trade, or below $373 by August expiration. But spending $22 just to bet against Netflix? Don't freak out, Mike's got a better way to do it. So to cut costs, Mike then sold not one, but two August 370 puts for $12 each, or for $24 total. Now between the $22 he spent on buying that $3.95 put and the $24 he collected by selling those two $370 puts, Mike is taking in a total credit of $2, meaning Mike sees immediate profits below that $3.95 put that he bought. But there is a trade-off. And because Mike sold more puts than he bought, he could be forced to buy Netflix at the strike of the puts that he sold, or in this case, $370, even if the stock goes way lower. Put simply, Mike wants Netflix to go to that $370 level by expiration. However, with the $25 he made between $3.95 and $3.70 and the $2 credit he received by selling those puts, Mike wouldn't see losses until Netflix hits $343. Below that, he would see losses all the way to zero.
Why are you keeping this curiosity door locked?
So to protect himself, Mike then bought the August 350 strike put for $7 and created his put fly. Let's do the math. Between the $22 he spent buying one put, the $24 he collected selling two puts, and the $7 he spent buying that lower strike, Mike spent a total of $5. Now to make money, Mike needs Netflix to fall below that $3.95 put by the $5 he spent on the trade, or below $390 by August expiration. But his profits are capped at $350, and below that level he is protected against losses. It's a complicated strategy, but we've seen stranger things happen. And since the time of the trade, Netflix shares are down around 7%, meaning Mike's trade is looking pretty good. So now Options Action fans are streaming into Options Action to find out just one thing. What will Cohen Carter do next? So Mike, what are you doing next?
Well, it was about a clean double when the stock was trading right around 370, and I think we can probably take some profits here and move on to the next one. I mean, we got some very, very big moves right out of earnings.
Carter.
So worst one-day drop in Netflix in 2 years, and while it did recover that day, the reality is it was a bad week this week. It did not recover, and the likely path is lower.
All right. Up next, we got your tweets and the final call from the options pits.